am Dawn Green with a report that interprets the financial position of Walters State Community College. Walters State Community College is a higher education institution that serves students in the state of Tennessee. Its primary academic demographic population consists of students enrolled in two-year degree programs. The year-end Walters State Community College financial report for 2018 showed the annual revenue flow and financial performance of the college during the end of the 2018 fiscal year. Data provided was obtained from financial statements and notes presented by management of Walters State Community College. Acceptable accounting practices designated by the Governmental Accounting Standards Board, or GASB, were used in the preparation of financial statements and financial report. The finance scope and focus of the report has covered the business activities of the college and include the net financial position for the institution, statement of revenues, expenditures, changes in financial net position, statement of cash flow, and financial statement notes were provided to clarify data presented of assets available for institutional operational cost. To meet the immediate and future obligations of Walters State Community College financial, current assets, liabilities, deferred inflows, deferred outflows, and net position of the college are analyzed to determine the current financial condition of the college and provide a foundation for developing future financial budgeting pathways. The availability of net position for expenditures by the college have been divided into three categories: investment of capital assets, expendable and non-expendable restricted net position, and unrestricted net position. A summary and analysis interpretation of Walters State Community College's net position show the yearly expenditures, revenue sources, and revenue investments of the college from the current and previous fiscal year. The amount of expenditures represented by operating and non-operating costs at Walters State Community College have consisted of debts from short-term and long-term liabilities. The total expenses of Walters State have come from operating expenses, salaries and wages, utilities, supplies and services, scholarships and fellowships, depreciation expenses, and payments to or on behalf of the college. Other expenses incurred by Walters State Community College were from non-current liabilities to pensions, unearned revenue, non-operating revenue expenses, and compensated absences. According to an audited statement of cash flows, revenues, expenses, and changes in net position, Walters State Community College's total expenses for the fiscal year ending 2018 was $46,167,500.68. Available cash flow for revenue for Walters State Community College has originated from a variety of sources offerings. Assets for the college are acquired from cash and cash equivalents, accounts, and net grants received, government-assisted revenue, net pension assets, pledges received, and capital net assets. Financial sources from non-current assets were also received from low-cost market inventories. Prepaid expenses, accrued interest received, and other assets. Walters State Community College is a state-funded institution of higher learning that receives state-appropriated funding. Other non-capital cash flows included in the college's financing net cash activities include gifts and grants received from sources other than capital or endowment purposes, state appropriation capital, proceeds from the sale of capital assets, principal paid on capital debts and leases, and interest paid on capital debts and leases. Walters State Community College has received a total of $95,424,330.43 in total assets and $43,414,157.95 from non-capital activities. Cash flows from investing activities increased as a result of rising interest rates in the local government investment pool, which is part of the state pool investment fund. The college is authorized to invest funds other than endowments in obligations of the United States or its agencies backed by full faith and credit of the United States. Repurchase agreement securities, certificates of deposit in banks and savings and loans associations, bankers' acceptances, commercial paper, money market mutual funds, and the state of Tennessee local government investment pool. These investment activities are in accordance with the system's policies of Walters State Community College. There are a number of ways in which the college can generate and enhance its funding sources, developing profitable outcomes from government aid, grants and contracts, philanthropy, auxiliary enterprises, and tuition and fees are primary financial resources that hold the greatest potential for funding sources. To develop new revenue streams and ensure that the college remains competitive, college student affairs must increase the student financial aid program recipients for full-time student enrollment. Serving a diverse student demographic will allow the college to increase its enrollment population, financial aid appropriations, and revenue potential. Securing grants and contracts through federal appropriations to support research and development in science and engineering will build capacity, increase exposure, and enhance the financial opportunity for the college. Obtaining private sources grants and Pell Grants would also provide total revenue above state-funded financial aid programs. Philanthropy activities from alumni members that cover tuition expenses and fees from private sources have accounted for 27% of Walters State's annual funding, and increasing such contributions may decrease a need to rely heavily on government funding resources. Auxiliary offerings that provide conveniences to students and faculty help supplement the campus's profit margin and foster a student-friendly environment which will boost non-academic revenues. The financial future of Walters State Community College continues to improve with the expansion of buildings and new academic programs. Diverse student enrollment growth continues to provide additional revenue and secure the financial position for the college.